HRB stock fell considerably in mid-May, and it has recovered a little bit since then. But the question is, why exactly did the stock drop so much? Well, the simple answer is that it looks like the Biden administration is looking to get rid of, or at least provide a free filing option. Maybe not necessarily get rid of tax preparing companies, but at least providing a free direct filing option with the IRS. And so there's a lot of people who are thinking that this might kill the tax preparation industry. I beg to differ. As someone who owns a tax preparation company, and I'm not taking on any more clients, so don't ask me, but as someone who's worked in the tax business, I am telling you, or at least from my perspective, I don't think this hurts H&R Block in any way or any material way. And so that's what I'm going to talk about in this video. And so as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel, and let's dive right into this one. But before we get into it, just know that I actually bought the dip on this one, so I am biased as hell when it comes to this stock. And so let's get into it. So you can see H&R Block's stock actually fell considerably in mid-May, and the question I ask is, why did the stock actually fall in mid-May? And you know what, this was actually something that I was asking, because H&R Block is actually on the tracker that all the Patreons get access to at that lower tier. And so every day I log into the tracker and I just look to see the movement on some of the stocks. And if there's any wild swings on any of the stocks that I'm following, I know right away in real time that I need to investigate. And so that's the real benefit of the tracker that the Patreons get access to. And so, right when I was accessing it, or when I saw that this dipped, I immediately looked into the news and got an idea of exactly what was going on. And so what happened was, in mid-May, on May 16, the IRS moved forward with a free e-filing system. And so essentially what that means is that they were planning to launch a pilot program for a government-run online tax filing system that's free for everyone. And this was part of the Build Back Better program. And as part of that program, they did a feasibility study where they found that the majority of filers would consider filing directly with the IRS. But here's the problem. When you're filing directly with the IRS, it's not in the IRS's best interest to make sure that you get all the deductions that you can possibly qualify for on your return. And I just don't think that the government would want to do that anyways. And so this is why paying that extra $15 for an online filer would work really well for you. And the other thing is, I think the people that this system really applies to are the ones who are already filing their returns for free. And so here is Laurel Blatchford speaking about this, who is the Treasury's Chief Implementation Officer for the Inflation Reduction Act. And so as part of the act, they're essentially looking to spend some of that money, essentially, is what I'm seeing. And so she's saying that the new direct e-filing program is being tested, and it could potentially save taxpayers billions of dollars annually. And she noted that the individual taxpayer pays an average of $140 per year preparing their tax returns. But here's the problem, and here's the grift. They're essentially creating a necessity for their service by using almost like a bait and switch type strategy. And this is what I mean about that. And you guys correct me if I'm using that term wrong, but she's saying that the average taxpayer pays $140 per year for a tax return. But I think this is nonsense. Once again, somebody who's been filing taxes for many, many years now, over a decade, most taxpayers that are paying $140 a year for the filing are not just paying for the filing, they're paying for an accountant's preparation services. The number one reason why you're paying that money is you want the accountant to tell you that you are in compliance in that year for all of the assertions that you're making on your tax return. You don't want to get audited and be offside. There's huge penalties for this. And so it's not just filing, it's the fact that they're paying for an expert accountant or preparer to help them prepare it and make sure that they're on site. So there's a compliance issue to this as well. It's not just filing. And so anybody who's paying $140 is actually going to continue, in my opinion, to pay that $140. In fact, they'll probably increase it every year. I mean, at my firm, I increase bills at I increase billing at 5% every year, which is higher than the rate of inflation because I can. That's just the level of service that I provide. Now, the other thing is I believe that the people that would use the free to file tax software are the people that have the very simple returns. But the people that have very simple returns are not paying $140. As you'll see in this video, they can be paying as low as $15 based on the widely available software services that are available right now. So you're not like, they're probably doing their math on this 140 number, but they should be more realistic, and they should probably do it on maybe $40, not 140, that's for sure, if they're doing this billions of dollars savings annually number on the 140. Now, they do go on to say that, simple electronic filing options that are currently available to taxpayers are around $40. Once again, they overstate this number, but they're comparing it because they want to say that the initial cost analysis shows that the pre-file option run by the IRS could cost as less as $10 per return to provide it. So they're looking for a higher number just to show the savings. But once again, I still feel like this is a way to drum up demand for their services, as government officials will do. And so I believe that I'm going to show it to you. So I know that while there are options that are in the $40 range, there are services and providers out there that are much lower priced that are already available. And I really think that if you're going to look, at the end of the day, you're going to get simple filers. And for those people, it probably already costs, or I know it already costs around as low as $15 to provide. So your cost savings is $5 a return for most people, I would say. And this is what I mean. So if you do a simple Reddit search on the internet, you immediately find this free tax USA software. This is a highly rated software. And it allows you to file your federal returns for $0 and your state returns for $15. Now, these guys are not promoting on this video or anything like that. I'm not getting paid to talk about them, but I just went and quickly looked up some of the most popular softwares, and so this is one. Of course, I'm more familiar with the Canadian environment, but I can also tell you that in Canada it's even cheaper. But of course, this is not a Canada issue. But like in Canada, you can file most simple returns for free. But I buy a piece of software that allows me to file 8 returns, and that software cost me like $30. So what's the math there? So $30 divided by 8, so it costs me $4 per return. And I'm sure that there are those types of options in America too. I just haven't found them yet, but I'm learning. And so you can see state tax returns cost you $15. If you want to upgrade to the deluxe edition, it costs you another $8 if you want some pro support. But like the whole point is, most people are just going to fall in this $14.99. And so they're saying, if it's free, how do you make money? They're telling you straight up that they make their money off of the state return and other optional services. And so you're effectively receiving value for every dollar. And then I just wanted to go into seeing exactly what their software provides. And so in the US, what you got to worry about is most people will fall under the basic category because you guys aren't itemizing deductions. So in America, you're able to itemize your deductions, which is pretty cool. And so if you want to itemize your deductions, you're probably going to be in the advanced category. And what that really means is, you deduct your interest on your mortgage, your property taxes, and then there's all sorts of different types of deductions, etc. I just read I went through almost like a text talking about all the credits and such that you get access to in America, and it's very complicated. And so I would say most people will fall into here. Some people who are who have investments will probably fall into the premium category. So I would probably fall into here. And then of course there's self-employed people. But in other words, I think the software, it looks like the software covers everyone. And so it's very good, and it's $15. So it just makes a lot of sense. And then I went and looked at other tax prep software. So you can see that TurboTax, it's free for anybody who has W-2 income and they use the standard deduction. That's like 60% of the population. So already that's free. And then if you want to do the deluxe version for itemized deductions, you're looking at $39. So, there's that $40 that they were quoting. And here's a couple others. So Tax Act, once again, free if you just have your W-2, and if you want to do itemized, it's $25, so it's pretty cheap. And then Tax Slayer, free once again for people with W-2s. And if you use the classic situation, which again will probably be the itemized deduction, interest, all that, it's $20. So, between this one, Tax Act, which is $25, or the first one that I showed you. Let's go back to it, the Free Tax USA. There are options here which are predominantly, on average $20 to file. So you effectively, you're not saving a material amount over what the IRS is looking to do. And once again, I do believe that the IRS filing system is only going to work best for people who are already able to file for free. And it looks like a spokesperson for Intuit actually has an issue with the data that the government employees are sourcing. And so Derek Plummer said that the study cherry-picked the data to support a flawed conclusion, saying that only 12% of taxpayers said that they would use a government-run system if state returns are not included in the program. So this is a very interesting thing, right? Because you don't just file federal returns, you also have to file state returns. So why would you file a federal return for free and then use another software to file your state returns? Why wouldn't you do it all at the same time? So again, they make a very good point. And then I would once again throw my point in here. But actually, let me just go back to this. So he makes a very good point. Why would you file two different tax returns? It makes no sense from a functional perspective. And I think as an accountant, I would probably recommend that people not use the system unless they integrate it with each of the state's filing systems as well. But then the other part is, why would you rely on the government to tell you what deductions are applicable to you and what tax strategies that you should use? In fact, they wouldn't tell you that, right? Whereas like some of these tax softwares, or at least all of the tax softwares that I'm familiar with, they will tell you to look out for certain deductions that you may qualify for. And so it's important to look them up. Like for example, this year I'll be putting the fact that, I have a kid now, and I'm pretty sure the tax software will say, hey, look, there's all these child tax benefits and credits that you may apply or qualify for. And I just don't think that a government system would do that. Now, they might, who knows, but I wouldn't rely on the government system for that. Derek also goes on to say that the study ignores the harm a government-run system will have on vulnerable taxpayers and the true cost to taxpayers. I don't exactly know what he means by that, but I would be interested to learn more. Now, the other more important point that I would want to make here is that when I was thinking about this, I would say, okay, look, if they're going to eat up some of the market share from people who are currently paying to file their taxes, if it even happens, I don't think it even happens, but if they were to eat market share of some companies, I would say that they would eat the market share of the companies that support the online filers who are filing by themselves already, so the DIYers. And although H&R Block does have some DIYers, the majority of their filers are not DIYers. So I just don't think that this impacts H&R Block the most. It might impact Intuit more if it does at all, but I don't even think it impacts Intuit materially. And so with that, let's just see where H&R Block is going. So here's their guidance that they provided at the end of Q1. And, I just, once again, don't see a material impact to H&R Block from the IRS's filing program. And, I did say that most of the tax filers that would use the free filing option are likely not any of H&R Block's customers anyways, as they may be filing for free already using TurboTax or any one of the other pieces of software. And so I do believe that H&R Block's long-term guidance still stays intact. Now, when I was highlighting this, I just wanted to highlight in red the things that I found most important or most notable, and then I ended up realizing that all of it is most notable, so I pretty much highlighted everything. But here's the thing, that it allows us to forecast their guidance allows us to forecast really accurately where they're going to fall. So I forecast right at the middle range here, but they're expecting to grow revenue between 3 to 6%. I think that they're under forecasting this, because you can just increase pricing by 3% a year and everybody will keep using your services, especially when it's prepared one-on-one with a preparer. And then on top of that, they have the wave, they have acquiring franchises, et cetera, et cetera. And so they're saying single-digit price increases. Yeah, low single-digit price increases. Yeah, I just think you can get to that 3% just by those price increases. And then, of course, you have industry growth that might give you 1%. They actually do a breakout, but I would say industry growth gives you 1 point, franchise acquisitions gives you 1 point, wave and block horizons give you 1 point. So that's 3 already, plus the price increases. You easily get to the 6%, but I forecast in the midpoint. What they do with pretty much all the money that they make is excess capital, and so they're essentially just paying it out in dividends and buying back shares. Now they're saying that they're going to grow their EPS by double digits, but the way that they're doing it is through buybacks. So when you forecast this, you just have to make sure you don't double count. And then, of course, once again, I was saying 100% of free cash flow generation is relative to the net income. So the way you would think about this is just owner's earnings less. They do have some debt, so you do have to account for that in your valuation. Now they're quoting a 13% free cash flow yield in 2022. I'm not, I am not using free cash flow as the yield. If they're going to say that it's going to be 100% FCF generation relative to net income, I'm going to use net income to forecast. Now, they did reduce slightly their outlook for 2023. They do expect around $3.70 per share. I'm looking at this as a $4 stock going forward. And, of course, they're going to increase the earnings per share amount with share buybacks. But, just thinking of it like intuitively, I would say that this is a $4 per share stock. So, if it's $4 a share and it's trading at $30 per share, you're looking at a 13% equity yield right off the bat. Or if you want to reverse it, you can say $30 divided by 4. You're looking at a company that's trading at 7.5 times earnings. That's not going anywhere. And so I'm going to go into the model where I show H&R Block, but I just want to show you what I'm talking about. So here's the tracker that the Patreons get access to. I'm just showing you guys Alibaba, but what you can actually do when you get access to the tracker is you can click into the ticker right here, and it takes you into the model for the particular company. So somewhere in here is H&R Block, and I'm just going to click into it and I'll get to the H&R Block model. But now, how do you get access to the tracker? You can actually get access to the tracker at the lower tier. And, I think it's the most value on YouTube. Essentially, you're giving me $5 a month for access to all of my research on all of the companies, including Alibaba, H&R Block, et cetera, Meta, whatever else is in there. And, there's over 200 of you that have already joined the team. And so try it out. And once again, if you try it out in the first month and you don't like it, just email me and I'll refund your money. And so I know you guys complain that I make the models too small on the screen sometimes. And so I made it a little bit bigger for you guys now. So you can see this is the H&R Block model as I'm forecasting it out. Sometimes I put notes here. I'm putting more and more notes in every one of the models for you guys just to give you an idea of how I'm forecasting things out. But you can see, this is their revenue guidance. It's going to actually decline by 0.3% year over year in 2023 based on their midpoint of their guidance. I'm expecting revenue to grow at around, or I'm forecasting it to grow around 3.5%. In fact, I'm actually going to increase that to 4.5%. And I don't know why I put it to 3.5, because they have a long-term growth rate of 3 to 6%. So I'll just increase that after this video. And they do expect a slightly higher compensation costs and other costs this year, which I just forecasted out. This is how I get to their guidance of I think it was between 3.65 and 3.8 for the year. But once again, once you value this or discount this out, you get to the valuation, which I'll show you guys in a second. And I just wanted to point out at the bottom here, here's their equity yield. So based on the current share price, you're looking at an equity yield of 11.4%. And this just slowly increases. Now, for a company that's, in my opinion, as riskless or, as lower risk as H&R Block, I am very happy to generate a 12% equity yield over the long term, and I'll show you exactly how that works. So here is the valuation. You can see that I'm actually using a terminal discount rate of 11.5%. You can ignore that 5%. And I'm using a terminal multiple of 15 times earnings. And so, you see that they do have a little bit of debt. That's why this reduces the valuation ultimately. Their current share price is just over $30 per share. So they're trading at around 60% of their valuation. Now, their valuation will go up because I'm going to turn up that revenue growth forecast. But, based on just where we expect the earnings per share to come in at for fiscal year 2023, based on their guidance, they're trading at an 11.4% equity yield. And so it's not a bad yield, but I actually think that there's a way to increase that yield. But due to just the length of the video, the way that I'm going to do this is I'm going to make a follow-up video where I'm going to do an analysis of the options for H&R Block. And I actually found a situation where I could earn close to 20% on a particular strategy for this name. And so the way I deployed capital into H&R Block is I actually am forecasting to earn at least 20%, and I'll show you exactly how that works. And so stay tuned for video number 2. But in the meantime, while you're waiting for that video, if you didn't notice, the CCP actually reduced their rates in China to sort of help the economy along. And so if you missed that video, you can actually get access to that video right here.